You're most welcome to say hello or good morning. And if you have any questions as well, you can just put them in the chat box. I'm going to talk a bit about what's going on with Brexit. The EU has agreed to provide the UK with an extension, which is a flexible one. So the extension is going to last until January 2020. But of course, if the UK can sort out and vote through the new deal, then it will be possible for them to leave early. So let's see how that affected the pound. Well, so far not too much of a reaction, which I think is perfectly fair because it was pretty much anticipated. It was only France that was objecting or had some issues with extending things, and but it was still sort of anticipated that something would happen. I doubted that France itself would be one to held responsible for causing the UK to crash out of the EU. So, what's happening here with the technicals then? Not much really. The short-term trend remains bullish about 127.89, which is this level here. And the market moved up from here, and on Friday tried to go down and then went up again, and it's sort of stuck in this little section here. At the same time, you have the euro versus the USD, which is clearly bearish. We turned bearish on the break to the downside here. And last week I said you can sell up here. Unfortunately, we didn't go all the way up to sell, but you could have sold on the recompletion here if you wanted to. And this is not the only pair that is bearish. If you look at the Aussie dollar and the New Zealand dollar, they are all slightly bearish, which gives me an indication that the GBP versus the dollar is probably not going to be able to hold up as the dollar is gaining against most of its peers. And as well, I think most of you guys can probably assume or sort of guess that we need a bit of a correction. We had a massive move here from the September second low of 119.72 all the way up to the high of 130.17. RSI was extremely overbought recently, and a little correction down to 126, 125. I mean, that wouldn't be a big deal. As well, it's a little bit like this in the financial markets. You literally buy the rumor, sell the fact. That's something that we know. And what happened here is that people started to position themselves, or at least not willing to sell, as they thought that maybe something good would come out of the whole thing, and we would avoid a no-deal Brexit. So now it's clear that we're going to avoid a no-deal Brexit, and as well as we have a deal between the EU and UK, the risks surrounding the pound are much lower than before. Now, that's what the market thinks. I'm not really sure I agree with that fully, because I do think we can still have an election, and we'll see today. I think there's supposed to be a vote about that, and if we do have an election, which makes sense, then you're probably going to have Lib Dems grabbing more seats, and in particular Brexit Party grab more seats, which means that most likely the traditional parties, Labour and Tory, will be weakened further, and I mean that could happen, and then you'll have a more polarized parliament, which could make it even more difficult to agree to something. If you look at the official polls, though, it looks like the Conservatives will do really good. But the same polls last time as well sort of indicated that they were going to do good, but in fact they lost that little majority they had when Theresa May called for a general election last time. So there's more risk ahead, and again that could also weigh on the pair. Now tactically, I think there's no real change here. The risk-reward ratio for both the bullish and a bearish position are quite good here. If the market indeed bottoms out, you can head up with about 158 pip. You're risking about 58. At the same time, if the market slides below support, you might be able to get away with a very tight stop loss, maybe up here somewhere, and can potentially go down. If you go down all the way down, you got a 2.65 times risk-reward ratio. Most likely what I will do though is that I'm probably going to put the trend funding level up here. So it's going to be 1.51. But sometimes what I do is I put a position on, and then if it quickly goes to my favor, I will sort of be happy to keep a tight stop loss. And if it doesn't go to my favor and sort of plays sideways here, then I would reduce the risk sometimes and lift the stop loss. So that's the GBP versus the USD. Now, if we look at all the other stuff, I do think that maybe the pound is going to decline, but it's more about dollar strength more than anything else. This is the euro versus the USD, and the market remains bearish. The idea has been to short sell, and we talked about selling here, as I said, and also that correction. If we do trade all the way back up to 111.05, which is the lows here, I think people will try to sell, target the lows, and as long as below 111.54, there's no reason to change our bias here. What else here then? Dollar yen. Dollar yen, what a boring pair, right? Forex in general has been a bit boring over the last literally since more than a year, I think. Moves really, really slowly until something like Brexit happens. Turn bullish already here on the 15th. The market bottomed out here, and we've been able to reduce stop loss orders. If you did buy here, you should be in a bit of profit, 20 pip or so. And overall, the trend will remain bearish. I do think if we go down to 108.48, people are going to be buying in, and stop losses goes down here. As for crude oil prices, things are looking good. You know, we talked about buying at these lows. We went far higher than not far higher, but went a bit higher than I thought, more than I thought. With prices being capped by 56.81, and I think if the market would come down to 54.23, I think some people are going to buy. But for all your scalpers there, if you want to scalp, then I think it's sufficient to keep an eye on 55.39, which is the low here. Maybe you can buy here, push to the upside, because I do think the way this looks like it's either going to come down a bit and then go up. If not, it's just going to go straight up. And if we take out 56.81, which is this resistance level here, we're going to go to the next resistance levels as the 57.73. If we move along here, then gold prices are not really doing too much, and the price is pretty much just trading sideways between 1474.25 and 1497.58. We had that little breakout. The momentum fizzled out though really quickly. Maybe one of the reasons for that is that stock markets are doing very, very good. European stock markets are doing really good, taking out and reaching new all-time highs. Nasdaq 100 as well reached a new all-time high. S&P 500 is very close to take out its all-time high. German DAX had also had a very decent ride over the last few months. So with stock markets at these levels, at least right now, the demand for gold remains weak, as we can see here. As well, the dollar is doing okay as well. So I think what could happen here is that this will probably be a bit more boring, but I guess some people might start to position themselves. At least technically, you know, it does look like we bottomed out, and I will continue to be bullish about 14.74, but it could be quiet until we start to see stock markets go down. So what could cause the stock market to go down then? Well, we have the ADP report coming up. We have the Fed rate meeting as well on Wednesday coming up. Then you got the non-farm payrolls and the ISM number. As for the Fed is probably going to cut rates. After that, they're probably going to go on a bit on a pause. The market itself does not anticipate a rate change, but it's not very aggressive. They do anticipate at least one more cut after today by June of next year. As well, the dot plot, so the projections by the Federal Reserve itself, does not anticipate a rate cut this time around. In fact, anticipated to leave it unchanged. As well, economists are not as bearish as the market. Economists about 50-50 whether we're going to have a rate cut or not. It's just the rates market that is really positioned for a rate cut. Most likely we're going to get that rate cut, and then we'll see what happens. I think the big mover is probably going to be maybe the ISM number or the NFP. However, because General Motors, their workers went on a strike, it's going to look like all these people lost their jobs. Now, the estimate for the number is already around, I think, 90 or something like that. Some people say that the estimate or the actual outcome can be down as 50. So then if you put GM, it might be even more suppressed. But then the GM struck a deal with the union. So these people that lost their jobs will be put back into the payroll in November. So the NFP is going to be very distorted. On the other hand, you have the ISM number, which is going to be key, and people are going to focus on that. The last few numbers have been bad and do indicate weakness. And you might ask yourself, why are stock markets so high then? Why is like the Nasdaq 100 at a new all-time high? Well, I think it has to do with all these rate cuts we had and the QE that we had, and as well trade wars and the becoming less intensified. And then you have as well the PMI figures from China looking to stabilizing, in fact rising a bit. And in Germany as well, people starting to see a bit some stabilization. So this, again, it's a bit like buying the rumor, selling the fact, potentially, where stock markets have moved up higher because of these news. And now when the data, when it finally starts to turn better, if indeed it starts to turn better, you have a situation where you can see potentially a bit of weakness in the stock markets. However, though, we can't ignore all the facts. I mean, just to give you an idea, this is the Nasdaq 100, new all-time high. S&P 500, you can see here, is pretty much also very close to an all-time high. You got the German DAX, which triggered this inverse head and shoulders, head, left, right shoulder. You have this neckline going via this level here. So, and then you have a bunch of other stuff. So you know, I don't know if you know, but this is the Swedish stock market. Sweden is a small country that exports, and so it's a bit like a leading economic indicator, and their stock market is definitely at new all-time highs. You can see clearly had a nice break. And then you get China A50, which, let me see here, this is some old setup. Head and shoulders that never triggered. Instead we have an ascending triangle that might never trigger. But if it does trigger, then it's not so difficult to see where this may end. Might have that little push here. So the markets are telling us something, and it will be bad to ignore it. Also, what's just quite interesting is that you have things like GBP/USD trending nicely. You have gold prices, even though they're not moving too much right now. You know, they had a very decent trend this year, and now maybe stock markets are starting to trend again. So maybe we start to see a bit more trends, and you know, going with breakouts, holding positions for a bit longer might potentially come back in play, especially if the S&P and the Nasdaq breakouts here have any legs. So it's definitely starting to become interesting. Volatility starting to decline. Again, the whole narrative for the last few months has been to be things are going to be bearish. I think that could potentially come back. Unfortunately, you know, you have tariffs which are supposed to come up in December again, so that can spoil things. And then you have rate cuts, which is sort of limiting that. So what should we do then? I think for now, we just go with the flow. You just go with the charts. The charts telling us better times ahead. Maybe try to trade that, and you just try to trade that in a sophisticated way, which is to have a good risk reward ratio. So I know I don't cover the Nasdaq with you guys, but last week I said to some people that to buy down here, and now we moved up higher, a bit more than I thought. And now I think if we go back down here, some people will look to buy here and then go upwards. So looking for on decent risk reward ratios, I think is important. Okay. Good morning, Nikos, and we have also Karamarat. Good morning to you, sir. Or good morning to you. All right, guys, if you have any questions, just put them in the chat box. If not, I think we're going to wrap things up. If anybody's new here, we publish a lot of content here. We have effectively 3.5 people, 2 guys publishing full time, then we have another guy publishing half time, and then another guy publishing half time, which is me. So we put a lot of content out, and everything is free, like this thing here, and a lot of different things are free. However, you just need to become a member. and that is straightforward. We actually had a lot of people signing up over the last few weeks. So if you want to join. It's very straightforward. You click here, you can read the articles. Very straightforward. Okay, guys. Thanks so much for watching, and I'll see you guys tomorrow, same time here on Investing Cube. So just bookmark this page, and I'll see you guys tomorrow, same time. Have a great day. Thank you, and bye-bye.